Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and we're getting an update today on Elemental Altus Royalties, traded on the TSX.V under the ticker ELE and on the OTCQX under the ticker ELEMF. And we're joined today with the CEO of Elemental Altus Royalties, Fred Bell. Fred, always great to get you on the show to get an update. And you got a big announcement here this week that it's going to be fun to dive into. On October 16th, you announced to the market that you've consolidated a cash flowing gold royalty portfolio from AlphaStream. Now, this is 24 existing royalties. 3 of them are cash flowing, 21 development and exploration stage. But this is the other 50% that you did not currently have on these royalties, bringing you up to 100% on a number of these revenue generating assets. So this was for a consideration of 28 million US in equity. It's an interesting transaction because it's kind of more consolidation in the space. I think it's interesting that they chose equity over cash. So maybe speak a little bit to how this deal came together and from a big picture, what it means to the company.
Hi, Shad. Thanks. It's a really exciting transaction here. We are consolidating, as you said, the half of the portfolio that we didn't own, and we're doing it with AlphaStream partners we've worked with over the last 3 years, who are investors in the mining space, very familiar with the royalty space, based in Abu Dhabi. And I think they understand the model well, and they are benefits of scale and of critical mass. And this transaction, it will be adding approximately $6 million in revenue next year, not at spot prices, consensus. And in terms of what that does for us is all of that revenue really after tax comes straight through to the bottom line. So there is no cost with it. So this is a transaction that whatever it adds in terms of overall revenue, it has a dramatically outsized effect on our free cash flow. And that is the inflection point we're at. And so I think for them, they're getting a shareholding in a really well diversified company, which has a rare combination of robust cash flows, increasing production over this year, 2024 record, 2025 we expect to be a record, and that growth potential across the other approximately 70 royalties in our portfolio. So I think it's a really mutually beneficial transaction, and it's one that I think delighted to have AlphaStream as a shareholder in the company going forwards as well.
Well, it is a great transaction in the space, and inside of these 24 royalties, 3 of them are cash flowing, and then the other 21 have exploration or development upside. Let's dig into the 3 cash flowing assets first.
Look, it's 3 that we're very familiar with. It's Allied Gold's Bonikro mine, and that really ramped up over the course of this year. So it is that royalty, the vast majority of production there is from our royalty area. We have a royalty on Ballarat in Australia, and this is a mine that had new ownership this year. And we've worked closely with the new owners. I think they've invested a significant amount of capital in the mine, in the infrastructure, and in the equipment over the course of this year. And we've been able to do a number of site visits there and get comfortable with the assets and operators. And then lastly, SKO, the South Kalgoorlie operations for Northern Star. And this is really their cornerstone mine around the super pit at Kalgoorlie. And we have a number of royalties actually around that mine. One of them in production, but another really important one, Hercules, in the exploration portfolio that Northern Star have spoken to, as it was a discovery made last year, and I think will be increasingly material relevant for them going forwards.
Well, Fred, I think that brings up another interesting point about the royalty business model. Somebody like Northern Star, one of the best operators in Australia, maybe to speak to, again, the benefit of the royalty business model is having partners and operators that can do things on these deposits by expansion. They could ramp up production, they can increase their exploration, and they can do all of that work without it really costing you anything else. So maybe to speak to the upside in having quality partners.
Yeah, look, maybe that Hercules discovery at Northern Star is a great example. It was discovered last year. It's within the operating package of the mine already, and they have rapidly drilled it out. I think they've drilled to 700 meters depth, and the resource there is open, and they talk to open pit and underground potential. And I mean, in terms of some of the results, they're getting 46 meters at 2 grams, 38 meters at nearly 5 grams, 35 meters at 6.5 grams, 23 meters at 7 grams. So some really, really good high grade, thick interceptions continue at depth. And that is a project that you need significant financial resources to be able to drill out and expand that quickly. And having an operator like Northern Star on the asset, where they have the infrastructure, billions of dollars over time invested there, and when they do make a discovery, they can go in really aggressively and over the course of a year, 18 months, drill it out to 700 meters depth. And I think anticipating them coming out with a resource and a study on that next year, that's the kind of optionality you get as a royalty holder when you have good quality operators. And we've seen it on another of our royalties that we already owned in the US with Arizona and Sonoran. And they have, I think, tripled the metal in our royalty area over the last 18 months. So again, we don't pay anything for that. And we get all the optionality and we get all the upside going forwards.
Well, let's talk about what you will be getting paid and how the revenues from this build. Really, this is going to be very substantial for 2025 and moving forward. So maybe speak to what this does, this package of royalties, in concert with your other revenue generating royalties. How does this set you up for 2025 from a revenue generation standpoint?
Look, in terms of where we are, this portfolio is going to add probably at consensus pricing about $6 million extra revenue in 2025. And, I think it's in a $2,700 gold price environment at the moment. There is a material difference between consensus pricing and spot pricing. And that's, we're not talking 10%, but we're talking 20% plus, which is unusually high gap between consensus and spot. And as a company that has a significant proportion of gold royalties that are in production, we get that immediate leverage to spot pricing as of today. So consensus, it will add 6 million to our revenue next year. And that would take us to pro forma, call it 31 million US at consensus pricing next year. And that's before about $12 million in one-off payments. So if we take consensus pricing 20% plus below spot, we're talking about 31 million US dollars of revenue next year. And in addition, $12 million approximately of one-off payments. So into that $40 to $45 million range for next year in terms of revenue, which is, that is nearly double what we're going to be getting in overall revenue from this year. And it's a multiple of what we've got in the past. So it's going to be a strongly cash flow positive year with huge leverage to current commodity prices, in particular gold.
Well, maybe just speak to the longevity of these assets too, because while we can get excited about more revenues coming in next year, and we absolutely should, it's not like it's just a next year thing. Some of these revenues are going to come in for a while. So also speak to the duration of some of these assets.
Yeah, and look, I think the royalty in Australia, in particular in Ballarat, that is a mine that has been in operation for a very long time, for years and years. And I think that the new operator coming in, investing a lot of money, that royalty for us is currently capped, and it's one of two that are capped. But I think for us, we've worked quite closely with the operator there. And I think we see the opportunity and the potential to look at adjusting and improving the royalty from our perspective, while also, in a win-win scenario, being able to offer them capital for specific development projects to improve production and rates, as well as some of the really uncapped royalties like South Kalgoorlie Ops and the Hercules one that's not in production yet with Northern Star, both of those. I think there's also a few opportunities in this portfolio to really improve the existing portfolio and asset base. And part of that is because we've owned these assets ourselves for 3 years. So we've built up a really good understanding, done multiple site visits. We know the operators. So I think that consolidating that ownership, where we'll now own 100% of it, I think that's a good position to be in to start talking about how we can also add value to it, the portfolio itself going forwards.
So you do have the wiggle room to renegotiate some of these transactions. So it's a win-win for both parties, where you could take them from a cap to a longer life asset. But there are some assets in here out of those other development and exploration assets that are going to have a bright future. If you were going to pick one or two other ones out of the basket that are not currently in production, are there any other ones that have your eye in this portfolio?
Yep, there's a few that are, look, there's a whole range of operators there and some really well-known ones in Australia, and Northern Star, Evolution, Hancock Prospecting, Zijin. So there's actually a whole host of mid-tiers and majors that own some of the assets. I think the one that I touched on earlier, Hercules, that really catches the attention because of the potential the size and the scale, and the fact that it's a very new discovery in the shadow of the head frame and existing operations. So that one's probably the one that catches our eye immediately the most. And then there's a few that are on effectively brown fields for existing assets. So again, that really reduces the risk of those going into production, because they can be satellite pits at existing operations rather than needing to be a standalone mine to be built and financed by itself. So I think a number of potential satellite deposits in there and projects, as well as one or two that by themselves have the potential to be really material. And all of those exploration and development royalties, all of those are in Australia. And the reason they're in Australia is because this portfolio originally came from Newcrest. And people are probably familiar now, but Newcrest were acquired by Newmont recently. And a lot of these royalties are as a result of Newcrest's business development activities across Australia. And that is why they're in Australia. And that's also why there's an unusual number with really high quality operators, because some of these assets moved from Newcrest into the hands of others.
Now, another thing that's part of this transaction that we should probably unpack here is that AlphaStream does have certain rights, including the right to nominate a director to the board, and they do have some top-up rights. So maybe just speak to some of the other dynamics inside of this transaction with AlphaStream.
Yeah, in the announcement, we said that the nominee from AlphaStream will be Prashant Francis, who we've worked with for a long time, very familiar with the royalty space. So expect that on conclusion of the deal, he'll be joining the board. And I think that for us, we've always wanted to work with good quality investors in the space, people who are knowledgeable and understand it. And I think that where we can add to strengthen our board in that regards, I think we'll always look to do it. And then we see AlphaStream as another really cornerstone shareholder, strategic shareholder moving forwards. And so I think the fact that they were keen to become a material shareholder in the company and to help grow the company, I think that's a really positive testament to the portfolio and the assets that we've built. And I think also an aligned vision in terms of what we can do going forwards.
Yeah, nice to have another key cornerstone strategic investor in the company. And I guess just from a big picture standpoint, Fred, we were talking a little bit about this off mic before we recorded today. Royalty companies in general are doing well. Obviously, the revenues are growing, but a lot of people are, I guess, distracted by the shiny object. If there's a gold producer or a silver producer that's seeing massive margin expansive on a single asset project, sometimes people will flock to that. But maybe unpack why they should still be considering the royalty package that you have at Elemental Altus for the future, for not just how it can grow on your whole portfolio of assets, but also just like you were saying earlier, the leverage you have to rising gold prices and what it does basis consensus pricing basis where spot pricing is. If gold was to keep on trucking and go to 2,800, 2,900, 3,000, what does that mean for a company like Elemental Altus?
Well, look, I mean, at today's pro forma market cap with this acquisition, you're talking about a roughly 200 million US market cap company. And that's for a portfolio that next year we should be generating, at spot pricing. If we were talking about spot pricing, we should be generating $50 million order of magnitude of revenue. So, and we've got some really cornerstone assets in there, and that is putting no value on the whole rest of the 70 assets. So I think that the reason we're such a compelling investment is because we have a really rare combination for a 200 million market cap company of really, really robust cash flows. I think more than any of our peers are going to be. We have production that's actually organic growth in the portfolio this year into 2025, into 2026. And we have some really material development assets like Arizona and Sonoran's Cactus Royalty that are in the portfolio in the future, and where they have a 30-year mine life based on current plans. So for us, that direct exposure, leverage to a commodity price, continued revenue growth, translating into expanded free cash flow margins and ability to keep reinvesting that money, all of those make us an incredibly rare investment opportunity at the market cap and size that we are today.
Well, and this is a fantastic transaction. Again, it was an equity deal, but I know that you still have the ability, if you wanted to deploy cash or deploy equity for future acquisitions. You know how it is, Fred. People see one and they want to know, what about the next one? So maybe talk to the bandwidth the company has to continue to do accretive transactions?
Yeah, it's a very good question. I think that between the cash flow we're expecting next year, the cash on hand, and the availability that we have on our credit facility, I think we're looking across 2025 and saying that we could be investing $50 million, quite comfortably across 2025 into new opportunities without needing to issue any shares at this stage. And that is relative to our market cap. If we can invest 25% or more of our market cap in 1 year, that's really material. And, versus the bigger companies, I think that puts us in a position where we can really, really grow. And being able to add to the portfolio and grow it when we're at the inflection point we are, that's going to be a key contributor as well going forwards.
All right. Well, we'll be on the lookout for future acquisitions in the space. We'll be looking at the revenues and seeing how they grow as the calendar rolls over and we head from 2024 into 2025. And Fred, always great having you on the show to unpack some of this. For people listening in, if you want to follow along with the news out of Elemental Altus, definitely click on the link below this interview. It takes you right over to the company website, straight to their news section. So as they make new acquisitions, as they put out quarterly reports, and as they do partner updates, you can follow along with the news from Elemental Altus real time. And Fred, keep us posted. We'll get you back on for an update. And as always, looking forward to our next conversation.
Thank you, Shad. Much appreciate it.